If you have over $200,000 sitting stagnant in your bank, retirement account, or home equity, then you're literally losing money. On this show, you learn how to get that money working for you consistently and conservatively. Learn to grow your nest egg with your host, Sean Winslow. Let's dive in.
Hey, Greg, welcome to the show.
Hey, Sean, how's it going?
Doing great, man. Thanks for taking time out of your schedule to get on here with us. Listeners, it's funny. So Greg and I grew up ski racing together, of all things, up in New England, the Northeast, in Vermont, to be exact.
Great Queechy Hill.
That's right, Queechy, Vermont, the little big hill, the big Q. It's just funny how life works, because we grew up skiing together, and we would see each other every winter. Talk sports, talk skiing. I think we had one or several, pool and foosball games that were played in the clubhouse. But now
some time in the rec room.
Yeah, exactly. But now we've circled back and reconnected because of real estate. So it's kind of funny how life happens. So, Greg, if you don't mind, just giving the listeners a little background on yourself and how you got into real estate investing.
First off, thanks for having me on here, and definitely appreciate it. And like you said, it's definitely funny how things work, how, we grew up together, seeing each other in the winter. And then, I don't even think we really knew that either of us were in real estate. And then I think you maybe somehow through social media, we kind of reconnected, and now here we are. We've been talking for, maybe a year or so now, but I got started back in 2014. Actually, my dad had started this company kind of on the side as kind of a side hustle, back in about 2013. And when I graduated college, he had a couple smaller multifamily properties that he owned and was kind of managing and looking to maybe add some more. And I was kind of in between jobs, out of college, and he started to scale up. He started to get some more deal flow, and I started to make broker calls and kind of help him out on the side as well, while I was actually looking for jobs. And at the time, we just ended up getting, a tremendous deal flow, and just always had something under contract. And we just kind of took it from there and started growing this operating business. And built our investor base, found more deals, and I've been doing it ever since. So it was a great opportunity that I had, and I've just continued to run with it and build our company. So.
Oh, that's great. That's so cool that you started right after college. I know you talk to a lot of people. It's like, what's one thing you would have done differently? And it's like, start earlier. And I often agree with that. There's not much earlier you can start than what you did. So that's awesome. But both of us were, when you go to a meetup or any type of networking event, we're usually the youngest, if not one of the youngest, if not the youngest at the event. I'm 32 now. When I started, I was in my 20s. So I was always the youngest. And you got the hunger aspect, where maybe you're a little hungry at a younger age, but the age can kind of be a detriment. In some terms, people look at you like, oh, you're young. Yeah. But people are still crushing our age. And I just wanted to get kind of your perspective on that, and what it's like to be, a younger millennial in this, in this business where we're buying multi-million-dollar properties.
Yeah, definitely. I think that's a great point. I mean, I started when I was 24, I believe. Now I'm about to be 31, and I still go to networking events, and I still find myself to be on the younger, one of the younger people at the event. And I think a lot of it has to do with people not being aware of, especially millennials, not being aware of how to get into real estate. How do you get in? Obviously, stock market, crypto, you just download an app on your phone, you can get right into it. A lot of people are into crypto these days. That's kind of the looking for that, maybe get rich quick type thing. But I think real estate's, a great tool to have and get into at a young age, to start growing your wealth at a young age, and also, building your passive income at a young age as well, to, enhance your current lifestyle. But if you continue to grow that, throughout the next 5, 10, 20 years, if you start early, that's a great, you're kind of building your retirement plan as well. So I think, the opportunity to get started at a younger age was great. And I think more millennials need to start looking at getting started in real estate. If you have saved up about, $20,000, $50,000 and looking for a place to put it, I think real estate's a great investment opportunity. But also from an active standpoint, just calling brokers, it's something you can kind of start on the side and maybe turn into a full-time job over time. But I think it's certainly something millennials need to start looking into more, and realizing that they have the opportunity to get into real estate, and they have access to these deals. So
Yeah, Greg made some really good points there. First, like, anyone can get into it. It doesn't really matter about age. And I'll admit, I had limiting beliefs at one point in my 20s where, I thought it was, you had to have like the capital yourself, or you had to come from like a wealthy family, or have some big wealthy backing, or have the experience, or be some institution to play in this game. But it's simply not true. Look at Greg and I are case in point. Look, we both are acquiring multi-million-dollar real estate properties, multifamily properties, and age is not a factor. It's about the work you're willing to put in. You got to educate in yourself, invest in yourself, educate yourself, so you can, when you, like he mentioned, call these brokers, so you can have that vernacular. You can, to some degree, sound like you know what you're talking about, because it definitely is a certain lingo and language that brokers use, and if you're not familiar with it, they're going to be able to sniff it out pretty fast. But that's a good point he made of, calling those brokers, building those relationships. And I know I've talked about this before, but that is super important in a competitive market. You really need to stand out, develop those relationships. So Greg and I were just talking about this before. They've got off-market deals recently that they're the only ones that were shown the deal. And that's not just because Greg's a handsome guy or a cool guy, even though he is, it's because he's built these like lasting, deep relationships with people and that's how you win in this game, especially in a market like today. And if you want to hit on that, go ahead.
Yeah, and I think, there's multiple ways to get into it as well. That's something that a lot of people don't know. There's multiple ways to get into real estate. Like you said, I think a lot of people have this mentality that it's reserved for ultra wealthy individuals and institutions, but really anyone can get into it, and it's a lot more accessible than it used to be. You can start calling brokers and find deals to either invest in yourself and manage yourself, or you can bring in partners. I think just, I think me and you both were lucky to have good mentors to, I myself didn't, when I graduated college, I wasn't like, oh, I'm going into real estate. I had, my dad and a couple other great mentors to kind of lead the way and point me in the right direction. I think building your network, going to, if you have an interest in real estate, there's plenty of meetups around, I'm here in Boston. I'm sure if you put in a Google search, you can find real estate meetups, near you. Building your network, you can, like me and Sean both said, find deals yourself. You can invest passively in other people's deals. You don't need to be a millionaire to invest in these deals. You can invest smaller chunks of money into these deals to become a passive investor, and you can learn that way. You can learn by passively investing in someone else's deal and just getting started and getting into the deal. If you do have a pretty good network, you can utilize that network, educate yourself, and then educate your network, and try and raise money from other people and get involved in real estate that way to invest alongside you in these real estate deals. So I think there's a lot of different ways to get involved that a lot of people don't know about, and it's a way to get started much earlier rather than wait until you have enough retirement funds to invest in a deal. So
don't
just
wait.
a way to get started earlier than you might imagine.
Yeah, and it's a team sport, so don't think that you have to or even need to do this all by yourself? Because most people don't. Like we don't. We both of us have partners, multiple partners to get deals done, and that's that's how it's done, especially if you want to scale. So talking about scaling, Greg, what where are you guys at now? Like, where did you start, and where are you kind of going with your business?
Yeah, definitely. We've definitely taken the team approach and have multiple partners. And I think that's one thing that I kind of realized early is you need partners in deals, and you need different people in different seats. And I was lucky enough to be able to find some early partners who also were mentors early on to kind of help guide me and grow my business. And so we started here in New England in our backyard, buying multifamily properties. We partnered with a local broker and they were a brokerage firm and management company, and they were probably, maybe to this day, still our best partnership. And we're still acquiring deals with them. And so that was kind of our New England partnership that we're able to help scale us in New England. They handle implementing that third party management, so you're not dealing with tenants, you're not knocking on doors to collect rent. You kind of outsource that to your third party management company. And then finding those relationships in other markets. We've always had this boots on the ground approach that we own properties in Alabama, Illinois, here, Vermont, New Hampshire, Connecticut. We've done deals in California, and all those are through partnerships that have helped us scale our business. Finding people that complement our skill set to help, identify these deals, contribute capital to the deals, manage the deals. There's plenty to do in every one deal, and the more like-minded partners with the same values and same goals as you that you can find and network with, that's how you scale your business. So we've been very lucky to find a lot of great partners throughout the years, and it's really helped us get to this point, and we're in a position to continue to scale. So that's not, I think we all hit ceilings at some point, so you always need to find a way to kind of break through those ceilings, and finding great partners is how we've done it. So
yeah, 100%. And I think that's a really good point you made on the boots on the ground, especially when you're getting into a new market, because every market has its its own little nuances that you just won't know until you're in it. And so it's important to have those boots on the ground when you first get in. And if it's like a fruitful partnership, then keep it. And that's the thing about real estate is the partnerships are deal by deal basis. It doesn't have to be a marriage. And that's what is great about it. So for instance, on this Georgia property we just closed on, our construction management arm is based out of Georgia. So we're super comfortable with that. So they can get down to that property within like an hour and a half. And so they're always going to have eyes on it. They know the market. And so we're really comfortable going into a new market. And now once we grow, we're going to become more comfortable. So maybe we're not going to need certain, partners to scale there. But I think it's important to start with boots on the ground partners. And I recommend that to anybody. And that could be anyone. It could be a friend. It could be former colleague that maybe lives in the market, a family member, just someone who knows that market and can tell you kind of like where things are moving, what's going on.
Exactly.
I think that's super important. So
exactly.
what's on the horizon for you all?
So we're still, we're still always looking for new opportunities. So we're looking to continue to scale. Definitely a competitive environment out there right now, but we think, the fundamentals still support continued growth. We're still seeing rent growth all across the country pretty much. I think, like I said, the fundamentals still support the multifamily being a good investment. So we're still looking for new deals, mainly in places where we have those boots on the ground partnerships and feel really comfortable managing the assets. So we're still investing here in our backyard in southern New Hampshire, and identifying new deals here because we have the management capabilities and are very confident in our team to manage the assets. And same with the markets outside of New England. We're still looking for new opportunities. We are selling some assets as well. We're always, part of real estate is you're always buying and selling. You want to be able to buy and sell in every stage of the market cycle. At the end of the day, market cycles do exist. We're always monitoring what's going on in the market, but we want to be able to build a company that can buy and sell at any point in the market. And I think you do that by having a good team, good broker relationships. You could be at the top of the market, but if you have those relationships, you can still identify undervalued assets within any local market. And if you have the management team to effectively manage those assets, you can manage them through any market cycle as well. So we are still looking for, identifying new deals, building our network, and looking for new opportunities.
That was a great point. And everyone listening, I would rewind and listen to that back, because that's how you succeed or fail in this business is what Greg said. You need to be able to buy and sell in every market cycle, because like he said, there are market cycles and they'll continue to be. That's never going to change. And if you're not able to operate in the different parts of the market cycle, then you're not going to be able to operate over a long term. So I'm glad you brought that up. Because
or just to touch upon that point further, is one thing I kind of realized getting started is I'd read all these financial journals and read, articles about the economy and read economists, journals, and I hear about all these people trying to predict the next market crash or predict when's the correction coming. I've heard it since, I started in 2014. Everyone's, the correction's coming next year. Yeah. It's, although it's always something to monitor, our investment strategy is not riding a cycle. We're not on, a swing. We're not riding the wave. We are identifying undervalued multifamily opportunities that we can effectively manage and hold them for an indefinite amount of time to always provide good returns. There's things are gonna happen. No one predicted COVID. Things happen, but if you have your systems in place, you want to be able to, manage your asset throughout any, point of the market cycle.
Yep. If you buy a cash flowing property, a solid cash flowing property, you're going to be able to weather most storms. So that's what we look for. We're not here to hit that home run, like the appreciation game. Obviously that's, a part of our entire investment objective, but our main focus is cash flow, because that will weather you through most storms. Yeah. And talking about, the systems and processes that you need to have in place, how are you, managing all these different markets? I'm assuming you probably have third-party property management, but are you then asset managing yourself?
Exactly. Yeah. So we have third-party property management in place. Those are local management companies to the asset. So we have a management company here in New England. We have one in Illinois, have one in Alabama. Every market we go into, we identify multiple third-party management companies that we are comfortable managing the day-to-day operations of our asset. They deal with the tenants, they do the repairs, take care of work orders, do the leasing. We are then overseeing them. We're doing the asset management. We're reviewing. They do the bookkeeping as well, but we're reviewing bookkeeping, closely, keeping an eye on the bookkeeping, making sure we, implement, KPIs, key performance indicators with our management teams to, make sure they're hitting them every month. If we're just taking over an asset, we'll try and have weekly calls with our management team. Once we get to a point of stabilization and we're comfortable, where we try and move to like monthly calls with our management team and just reviewing those financials. And then we've taken it a step further where we have the third party management company in place, but we like to have an owner, someone who own a part of the ownership team who lives in the market as well, local to the market. So just just an extra layer of management that they can drive by the property, keep the third party management company accountable. We don't need to fly out to the market to surprise them, surprise the management company. Someone can drive by in a moment's notice, see what's going on, make sure the lawn's cut, make sure, unit turns are being done in a timely manner. So we've kind of taken it a step further to have that partner who lives in local to the market and local to the assets.
I really like that, having someone with some skin in the game, or in terms of skin in the game, they have some ownership in that property, that they're incentivized that it performs well, because it's true. Let's face it, not all property management companies are bad, but none of them are perfect. So even if you have a good one, they're never going to be perfect. There's going to be things that happen. I know I've flown to a property and they told us that certain painting had been done. When I got there, no, it hadn't. It's like certain things are overlooked. I've heard other worse nightmare stories than that, but I think that's really smart. We don't employ that as of now, but that's something I would definitely look into. What we kind of do is we have, third party property management, and then we asset manage it like you all are doing, and we have these calls to check the KPIs, like Greg said, the key performance indicators. So today, actually, I'll be hopping on a call later this afternoon. Right now, we're having them weekly just because we're phasing up CapEx, so renovations on the property. So we want to have weekly calls to make sure everything's going well, and we just took over the property. But that will probably taper off to more like every other week call once that's going. And I think that's really important, because it's obviously how we're investing. We can't be at the property every day or even every week. So it's important to know what's going on and keep people accountable. And I think
exactly
the way I look at it is, it doesn't matter what price you get a property for, you get it for the best bargain price out there. But if it's all about management, and if you don't manage a property, it's not going to be a good deal. So I think that's important.
I think you're exactly right there, that it comes down to executing your strategy. So you can buy it at the right price, and buying it at the right price is a huge win right off the bat. I mean, that's great, but at the end of the day, you do have to execute on your investment strategy and on your value add strategy. And if you don't have the team in place to do that, you're going to have a lot of headaches. Probably lose your hair pretty quickly, and make things much more complicated. But I think you're exactly right that you need to have that good team in place to execute on your strategy.
How often are you flying out there, or someone on your team to view a property?
Yeah, so I used to. So it's kind of all changed because of COVID, I guess. Well, now I guess we're back into it. So I've been trying to. I used to do quarterly. I'd go out there. Then when COVID hit, obviously that stopped. So I haven't been going out as often, and a lot of that has to do with having those boots on the ground partners as well. So I'll still try and get out there a couple times a year. We've been lucky as of late. Obviously, if you have a lot going on at a property, you want to be there more often. So sometimes it's kind of like, I've had instances where it's kind of like, all right, I got to be in Alabama next week, and it's like, kind of like crap. Like I got to book a ticket for Sunday. Like I'm going down. So you got to do what you got to do. But if you have, once you kind of get, get things stabilized and get your management systems and team in place, it doesn't have to be as often. And but still, I'd like to get back to going to these assets quarterly. But having those boots on the ground partners in most of our markets, we don't have them in all of our markets, but most of our markets, we have the boots on the ground partners who have done a great job being there and being at the asset, weekly or when needed. So that's helped me not having to go out quite as much. But you know, I would like to get back to probably going quarterly. So what about yourself? How often do you find yourself going out?
I try to go quarterly,
Yeah.
but with, like a kind of a heavier lift like we're doing, I'll probably go out there maybe twice a quarter,
Yeah.
in the beginning, just to make sure, because
Hmm.
it's, especially with the market, is we want to get everything done pretty quick. And
Hmm.
you also have carrying costs, holding costs when
Yeah.
you're doing a lift like this. So you want to get it done as fast as possible, but especially in a market we're in where we don't really know where things are going from an inflation standpoint, from a rate standpoint.
Yeah.
When you're doing this type of lift, usually, we're using bridge debt. So we're going to want to refinance
Yeah.
within like 2 to 3 years. So
Yeah.
I'm going to be out there to make sure, we're staying on track,
Mhm.
and executing our business plan, the way we want it done.
Yeah.
So yeah,
Yeah.
it'll probably be twice a quarter,
Nice.
but
Yeah.
then it's usually a quarter, and that could be
Hmm.
me myself, or it could be someone
Yeah.
else on my team. But I think
Yeah.
that's great that you have someone boots on the ground, which is really, beneficial,
Yeah.
because it makes such a big difference when you show up. Like,
Exactly. Yeah.
not even just the management, but the on-site staff,
Hmm.
if you have construction management, just
Yeah.
everything. So
Yeah.
that's
I think it goes a long way with having that presence on the property. It shows your third party management company and your on-site employees that you as an owner really care about the property and care about them as a team, and it builds good camaraderie with your management team, with ownership, third party management company, on-site employees, um, and holds everyone accountable, but
yep.
showing that extra involvement and showing that you care about the asset and them. I think it goes a long way with your entire team.
Yep, and we have a fiduciary duty to our investors, so it's,
Exactly.
it's
Yeah.
imperative we need to make sure everything's getting executed to the business plan that we presented them. Um,
Exactly.
yeah, so what's the future? Where do you see your company's 21 George, right? Did I have that
Yep.
right?
Yep. 21 George Investors. Yeah.
Where do you see 21 George in 5 years?
5 years. So I mean, we set our goals every year. We do the EOS system. So we
Yep.
we do the goals. So we're currently at about 25 million in assets under management. Our We would like to double that in 3 years, get to 50 million in assets under
Awesome.
management. And So I guess I have my 3 year answer. I don't have my 5 year.
Well, I like that 3 year. That I love that double.
So
That's amazing.
um, so we'd like to do that. 50 million assets under management, really with an emphasis on continuing to build our cash flow, to continue to scale our business, and grow into maybe a few new markets. A couple, south, the Carolinas we've been looking at a lot. But really just, continue to grow our investor pool as well, provide strong passive investment opportunities, improve, the quality of life of our investors, find these underperforming communities, apartment complexes to, improve the quality of life of the tenants who live there, the surrounding communities, and continue to overall just continue to grow. So that's hopefully we can kind of stay on the right path and continue to do that, and continue to find new partnerships, build new relationships, with our partners, and continue to grow with them as well.
Awesome. And for those that don't know the term, he mentioned EOS. It's Entrepreneurial Operating System, made famous by the book Traction.
Yeah.
But it's essentially a way, it's systems and processes to essentially establish you're running operating a business. It's,
Hmm.
it's pretty much, correct me if I'm wrong, but it's pretty much, you need to track everything. And
Yeah.
that's how and goals is one thing. You have a goal, right? Well,
Yeah.
what is it going to take to meet that goal? Like, what are
Mhm.
the steps that you need to take to meet that goal? And then you track
Yeah.
those. And
Exactly.
I know a lot of people that live by, EOS and traction, and it's something that I've been looking into and wanting to implement because I see how it works for others. So
Yeah.
how long have you guys been on EOS?
Yeah, a couple years now, maybe 2 years now. But yeah, I mean, I think a lot of people implement it to an extent without even realizing it. I mean, I'm sure there's aspects of your business that, and it's not the only way to operate your business. Obviously, there's plenty of other ways. But yeah, as you mentioned, it's just exactly you really start with your company values and what you're trying to provide to, in our case, what we're trying to provide to both our investors and the tenants who live at our buildings. And we're really trying to improve the quality of life to everyone, you know, for our investors by providing them, creating wealth and passive income, cash flow. So improve their quality of life that way, improve our our tenants' quality of life by addressing repairs and maintenance on time, improving the communities that they live at. So it really starts with that, your values and that what you're trying to provide. And then from there, it's your goals, 10, 5, 10, 3, 1 year goals, and just tracking it and then kind of working backwards to what you have to accomplish to meet those goals. So yeah, we've really, it's really helped our business grow and scale. So it's definitely recommend the book Traction to anyone out there listening.
Yeah, I'm halfway through it. I need to finish it, but
yeah, that's great.
It's an amazing book because it's not even just the fact how I mentioned, things, you track them so you can, reach your goals, but it's also you're creating systems and processes that can be replicated or duplicated by someone else. So if you need to fill a position, you essentially have the manual to do that position. And it's like from the book E-Myth. If you all aren't familiar with that, that's another business book. But the whole thing about E-Myth is the systems and processes that you want to work on your business and not in your business as an owner.
Exactly.
And to do that, you need to create those systems and processes that can easily be, accomplished by someone else as you continue to hire and grow. So I'm glad we touched on that. That's a great point for anyone who has a business out there, whether it's real estate or not.
Yeah.
So
that's a great part about it. It really works for any business. So it's highly recommend it.
Awesome. Well, where can everyone find you, Greg?
Visit my website, 21georgeinvestors.com, on LinkedIn, Greg Donahue, 21 George Investors. Probably, start from there, and shoot me an email, give me a call. And obviously love connecting with as many people as possible. I think growing your network is the first step to creating more success, and love to hear from anyone. Feel free to reach out to me. So.
Awesome. Well, I have 2 last questions that I usually ask most of my guests. And fair warning, everyone, or disclosure, I did not prepare Greg for these, but the first question. So this whole podcast, I guess I'll preface, this whole podcast is about, building wealth and achieving that coveted financial freedom and time freedom through investing in multifamily real estate. But with the caveat that, it's not just what you make, but what you keep. So we have a Finance Friday episode as well, where, I leverage my background in finance and talk everything personal finance. So with that said, the 2 questions. The first one is, why multifamily to grow your wealth and achieve financial freedom? And then the second question is, if you could go back in time and tell, that 24-year-old Greg that was just starting off in real estate, you could tell him one piece of like financial advice to, set up his life to be even better than where it is today, what would that be?
Yeah. So why multifamily real estate is to build wealth. I think it is the most kind of mapped out way to build wealth. If you can use cash flow to either live off your cash flow, or use the cash flow to supplement your W-2 income and improve your quality of life, while you're still building equity in the property, paying down your debt, making improvements to the property. It's just you're building wealth while while benefiting short term from the cash flow. And if you can continue to roll over your retained earning, when you sell an asset, roll over all earnings from that sale into another multifamily asset or another piece of real estate, and can you continue to grow that equity while benefiting current day from the cash flow, I think it's just a very practical way to build wealth, in a very kind of mapped out way to do it, rather than riding the fluctuations in kind of the financial markets. And that's not to say multifamily, it doesn't always go exactly as planned, but I think it's, to me, it makes a lot of sense. So that's why multifamily. Give myself advice. I would say, again, I'll point to my mentors and say I definitely had a lot of advice given to me, so I'm very lucky in that regards. I would say maybe be a little bit more, do more stuff like this quicker, get out and, I think I was very into analyzing deals when I was younger and first started out, but I wasn't necessarily into networking and getting out there and meeting new people. So I would say kind of build your network quicker would be my advice.
Yeah, your network's your net worth.
Yeah.
And things can happen that you don't even think of or dream of when you start growing your network. It seems like things just come to you. And I can't agree more. And that's why when you start your meetup again in Boston, I'll be down there.
Yeah, so, definitely. I'll definitely let you know, and you can come down and check it out. So
awesome. Well, thanks for coming on, Greg. I really appreciate your time, and this has been a great episode.
Yeah. Thanks for having me. I definitely appreciate it. It's always great chatting with you.
All right, awesome. Well, thank you everybody for listening as always, and we'll catch you on the next one.
Hey, this is Sean Winslow. After being in the financial service industry for years and having candid conversations with good people just like you, I realized that so many of us are wanting an investment strategy that provides solid returns and consistent income without the bumps in the road. There's little known secret that your financial advisor doesn't want you to know. There is investment out there that is less volatile and the returns are stronger. Get more details by going to greenbriercg.com and clicking on the free e-report. And by the way, if this show has provided you any value, then feel free to leave an honest written review and of course share it with a friend who needs it. See you next week for another great show.